Hey folks, and welcome back to the Rate Update with Dan Frio, where we talk real estate on a daily basis. Now, we do this a little different than most channels. A lot of them come in and they say, okay, here's what's going on with prices nationally, and here's what's going on with this. We do is we basically we look at the economics behind things. So again, my name is Dan Frio. I do this video on a daily basis discussing the economics and current events and news that's shaping real estate. In today's topic, we're going to talk about inflation. Why inflation? You might be like, Dan, I am so sick and tired about hearing about inflation. Well, that's why we're talking about it today. It is basically the conduit that's moving the markets all over the place. It's moving the stock market, the bond market, even maybe how much money you're paying at the pump. So let's break down the economics behind housing and why this week is one of the most important weeks that we're going to have in a long time. The reason why I say that is there's two reasons why the Federal Reserve was created. Don't know if you know that. Number one is to create full employment throughout the whole economy. So they're doing a pretty good job at that. The next thing is price stability, aka inflation. And they've done a miserable job at that. They've had inflation at the levels almost at 10% where we were last year, but that's come down quite a bit. And I'm going to show you how it's coming down even more. And then that's why I'm saying the Federal Reserve is done increasing rates. So let's look at basically the economic data that we have for the week. You might be saying, Dan, where's Monday and Tuesday? Exactly. There is no news for Monday and Tuesday. So there's really nothing happening today specifically that should be affecting mortgage rates. Okay, so what we want to do is look at the inflation numbers that are coming up and the employment numbers coming up. Again, why? That's what the Federal Reserve was created for, and that's what they monitor. So what we're seeing this week coming in is we have CPI numbers, we have PPI numbers, and then we also have initial jobless claims. Okay, so basically all the data this week is right pivoted around the Federal Reserve. Okay, so let me explain this to you. The CPI is basically how much inflation we, consumers, that's the C part of that, are paying basically for food, shelter, cars, and all kind of things. And then we have the PPI right down through here, which is the producer. That's the P part of that, producer price index. I'm not going to talk about that today. We're going to focus in on the consumer inflation numbers. Okay, so what I want to show you guys is how the consumer inflation numbers are actually broken down and what do they do? How do they compile this information? Well, they take a basket of goods and services. You're seeing it right here. What goes into the consumer price index? You're seeing shelter, food, education, transportation, medical. But the biggest component here, other than food, is shelter. Okay, shelter makes up 33% of this number. So let's focus in on that. But what I want to show you guys is some fantastic information right here. This was actually published just the other day from CNBC. Apartment rents are on the verge of declining due to massive new supplies, okay? So when you have more supply of something, like we teach on a daily basis, that means the price of something is going to come down. If you have way too much of something, the price will come down. So that's what we're seeing right here in this number. So what I want to focus in on is how bad are the numbers looking for apartments? Well, it's good for you and me because we're going to pay less for an apartment, but let's see what this looks like. Rents in August were just 2.28% higher than August of 2022. Well, the number that the Federal Reserve has been using for the shelter number, that you break it down right through here, this number that they've been using in here, they're saying shelter prices are up between 8 and 8.8% year over year, from July of last year to July of this year, okay? Well, based on this number, August of 2022 to August of 2023, that number is not 8 anymore. It's not even 7 anymore. It might be 0, okay? So if you put this number into the equation of, okay, so if this number here, the shelter number is 32%, makes up 32% of this CPI number, that number was 8% or 8.8%. Now it's, let's say, 0. What would that bring our inflation rate to be? The CPI number? Well, I used ChatGPT to help me do this. And there's a whole bunch of calculations above, but based on this information, the CPI number should be back basically in the 2s now. That's where the Federal Reserve wants it. And you guys might say, Dan, they want 2. I get it, folks. Once they get in the twos, they're probably going to, or they're most likely going to take their foot off the gas pedal and let the markets kind of, go for themselves. And based on this number, we're going to see the twos, maybe not in this reading this week that we're getting, but in next, probably in our, the next reading after this. So I'm just trying to break down the economics behind things for you guys. So that is the headlines that we have for today. There is no other data really out today. So let's get over to see, the market, no news is basically good news most of the time. Well, in today's market is nothing. So here's what we're seeing. This is what I see on my screen, one of my screens on a daily basis. And if you don't know what this is the bond market. This is where I live on a daily basis to try to figure out what's going on in the economy, what's going on in interest rates and everything else. What I focus in on is an MBS bond. Okay, what the MBS bond is this is the bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. A lot of people say, Dan, why don't you follow the 10-year Treasury? Well, why would I follow the 10-year Treasury when it doesn't have anything to do with mortgages, when I can follow a mortgage-backed security note? Okay, so what I want you guys to understand is right here, this is what's happening right now in the markets. It's saying the price of this bond is 98.11. It is down 0.16. What I need you guys to understand is when this number, the price of this bond goes down that you're seeing right now, that means rates are going up. Okay, there's an inverse, there's a yin-yang effect to this. Okay, we love when the price goes up. The price was actually up Thursday and Friday of last week, and I'm going to show you where rates are and how they moved last week alone. But based on the news that we have today, which is really nothing out there, the markets aren't liking something for some reason. It could be just it's a Monday, and it could be traders are catching up, or we had a substantial rally in the market on Thursday and Friday. It might be some profit taking. But let's get over to see where rates are, and I can kind of basically, help you explain this right through here. Rates just a week ago hit a 52-week high. You're seeing here. So these are the top 6 products people use when they're buying or refinancing a house. These are rates published by Mortgage News Daily on a daily basis. And what they do is they survey lenders all over the country and they ask them this question. If you had a first-time home buyer looking to buy a primary home and it was going to be a single family home, those 3 things are important. They have a 740 credit score and they're putting down 20%. What would their rate be? That's what their rates would be, okay? So most people do not put down 20% when they're buying their first house. They don't even put down 15% or even 10%. Most of them even put down 5 or all the way down to 3%. So if you're out there and you're like, Dan, I would really love to talk to somebody or help me educate or go through the numbers with me. Can I afford a house? I would love to buy a house. I'm in a financially good position right now to do so. What can I do? Well, pretty simple to do. Go to therateupdate.com. This is my website. I would love to help. I am licensed in all 50 states as well as Puerto Rico. Been doing this for over 30 years and would love to help you to see, do you make enough money to qualify? Is your credit enough to qualify? Do you have a down payment or do you need assistance with down payments? These are the things, please, what I ask everybody is do not disqualify yourself. Please reach out to us. We would love to help you. So how to do that is you can reach out in 3 ways. 1, click the Apply Now button. What's unique about this is you're not going to an application. You're going to actually have a survey. It's going to ask you multiple questions. Based on those answers to those questions, it's going to route you to the appropriate person on my staff that you need to talk to, okay? But if you want to call in or even email me directly, well, you can go right down to the bottom of our screen right here, and this gives you our 800 number, which is right here, 844-775-LOAN. That's 844-775-5626, or you can shoot me an email at dan@therateupdate.com. So I'm going to ask you one thing. If you find value in this channel and you'd love to see more, please don't forget to subscribe down below. Love to have you as a subscriber. Thanks so much for watching. God bless. Hope to see you here tomorrow. Bye-bye.